839, 105.7 Light FM. It's time every morning we check in, see what goes on with your retirement accounts and how Wall Street is doing. We start out quiet first part of every week, and the data dump goes crazy out of the government at the end of the week, and that's what we got today. Let's go downtown, look at the office, look at the numbers as they are, to the Statler Financial Services office, where Phillip Statler's standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well. Welcome to the first day of October and the first day of the fourth quarter of 2020. Can it get through fast enough?
Yeah, we changed quarters. We're now into the fourth quarter of the year, and Lord, 2020 can't end soon enough for most of us. Start out with the big government data dump. Set the table quickly. Yesterday was a nice up day on Wall Street after they wore off the shock of the presidential debates. They started reading the rumor mill about Washington finally getting its act together on a stimulus package, which you and I are kind of cynical about to begin with. Dow was up by 1.2%. NASDAQ up by 0.75%. Standard & Poor's was up by 0.83%. Decidedly green day, basically on optimism about Congress and the president getting together and maybe getting us a stimulus package, right?
Well, yeah, it's kind of funny. I was reading a headline that said, hey, the market goes the way of the coronavirus vaccine and the Washington stimulus package. So when it's optimistic that those things are going to happen, the market goes up. When it looks like those things are in doubt, the market heads down. So, hey, they must be thinking that it's optimistic right now because the markets yesterday and today are looking pretty good.
Yeah, it looks like we're going to keep that green momentum going today. And you and I both have kind of a cynical outlook as to whether or not anything that comes out of the House of Representatives will make it through the Senate. So we'll cross our fingers we're wrong and we don't have a crash and burn when the market decides that this all is kind of El Stinko and isn't going to happen, right?
Well, that's true. But I would think at some point, Dave, it becomes the president's advantage to get something passed to get some more money out to the people. I just have to think that probably is in his best interest.
And it might be in his best interest in about a week and a half or 2 weeks because October surprises are legendary during election cycles.
Exactly. And it's one of those things that he can put some pressure on the Senate to get some things done.
Understood. Always a possibility. Government data dump time to start the morning out. We got some good news and we got some news to report. First of all, the usual Thursday unemployment claims. We had a couple of beats, 837,000 first-time claims, and the continuing claims down to 11.8 million. The numbers may stink, but they're better than the market expected, right?
They really are, Dave. I mean, the initial claims was expected, depending on who you looked at, 847 to 850,000. So that 837 was definitely better. And then continuing claims, I mean, it was down almost 1 million from before. So I got to think that's good news also.
Absolutely. It's nice to see progress, even though it's not where we want to be, at the very least making progress in the right direction. Put that together, this kind of relates to the possibility of a stimulus package. The government reported personal consumption expenditure inflation today. It was expected to be about 0.3% in August. That's what they said. It looks like inflation is at the very least on the pace they expect it to be, which is also, it's nice to know things are under control.
It is, and so that's one of the only other numbers that you and I looked at that came in as expected. The other one that we had was one was a beat and the other was a whoopsie, and it kind of tells the tale of the tape that we're not happy to see. Consumer spending was up last month by a full percent. One of my reports said 1.5%. I'm not sure which is right, but we're definitely spending more. I lay that up against the fact that the government says personal incomes fell by 2.7% last month. We're spending money we don't have, and on the long term, that's not necessarily good news. Exactly right. And so spending's up, income's down. And that income is a miss also. I mean, they expected personal income to be down about 2% and being down, what'd you say, 2.7, I think. So that's a miss. Personal spending, even though people are spending money they don't have, some people will look at that as good for the economy. It may be good for the economy. It may not be good for their personal budget down the road.
And maybe the stimulus package ought to be just paying our Visa bills, huh?
Yeah, exactly.
Talking about personal income going down, the median might go down by a little bit over the next few days because we got a boatload of layoffs to talk about. This is one of the deadlines in the airline industry. Both United Airlines and American Airlines planning on laying off 32,000 workers. I mean, that's a statistically significant number, even in the context of the full national economy.
It really is, Dave. And you think about it, they were hoping that by now they would get some additional federal funding that has not come through yet because no other stimulus bills have been passed. And so they're going to go ahead with their layoffs. But they're not the only ones, Dave. We've got more. We've got companies like Allstate. They're laying off 8% of their workforce. That's about 3,800 people. Marathon Petroleum's laying off 12% of their workforce. That's a little over 2,000 people. And then you even have investment bankers like Goldman Sachs laying off 400 workers. So it's not just the airlines. A lot of companies are laying off folks right now.
Absolutely. There's a big thing out of our industry. A lot of temporary furloughs ended up getting made permanent in my industry as well. So the economy is coming back little by little, but it's not coming back fast enough to save a whole boatload of jobs. Next month's unemployment report might not look as pretty as we're hoping this one will.
Well, that's true. And I saw another article that said, hey, you know what? The economy has bounced, expecting it to come to a grind. And that wasn't a good headline, but I think that is, as this continues to be prolonged, companies are figuring out their line and what line they're going to have to follow to get through it. And so they're making the changes now that have to be made.
Understood. And while you read the tea leaves in Washington, while there's good possibility, at the very least, I'll say at the very least a possibility of an individual-based stimulus plan coming out of Congress, those fancy checks that end up in our checkbooks, the political will, I don't think the will to bail out the airline industry or the oil industry or industry-specific bailouts, I don't think there's any possibility of Congress looking at that favorably in the current political atmosphere.
I would think not, but I believe that actually the House had some $30 or $40 million allocated to that in their last stimulus bill.
Which is probably one of the things that would have trouble getting through the Senate, wouldn't you guess?
I would probably think so, but they're all looking at different businesses trying to get some. Actually, there's even a additional PPP, the Payroll Protection Program, that was put in that last bill, and I think that may be something that actually is probably needed to a certain degree for those companies that are actually losing money and can show that they're losing money.
And that actually, as a net zero benefit, did some good in the process too, because it at the very least delayed a lot of layoffs and probably saved quite a few.
It really did. It did save some jobs, and for those that it didn't, at least it got another 8 to 16 weeks of payroll out there.
Understood. Probably saved us money on the unemployment comp funds enough to the point where it netted out as being a zero balance thing. I know there were some reports that came out in terms of quarterly earnings. We got kind of a mixed bag, like I said, out of the government data dump. Anything to give us some buoyancy as far as individual reports this week?
We actually had some decent reports come out, Dave. We had PepsiCo come out, and they had a profit. They beat by about 17 cents a share, 18 cents a share. Revenue came in above expectations. Again, they benefited from everybody having to stay at home. Their snack division went up significantly because everybody's staying at home. And they actually kind of have given a full year number here. And they expect it to be a little bit more than the analysts had expected. So PepsiCo doing well, up 1.5% this morning.
Cool.
The next one I have is, and this one will be a big surprise for you, Dave, Bed Bath & Beyond.
Really?
They had a really good quarter. they were expected to lose 23 cents a share, and they actually made 50 cents a share profit.
Boy, after the last couple of quarters we've gotten out of that company, you're right, that is a surprise.
Revenue was well above estimates. Here's the deal for them. The first time in 4 years, same-store sales were up, and up significantly. They were expected to be about 2%. They came in at 6% on same-store sales. And then, they're expected to go down 2%. They actually were up 6%. And the digital sales, their online sales were up 89%.
I just knew my buying that mattress cover was doing some good, huh?
You helped them out, man. They're up almost 20% this morning.
That is good news to have one company, really beating the street and growing year over year, which is really good news.
It is. They really did have put it together, at least for this last quarter. Hopefully they'll be able to keep it going. And then the other one I have for you is ConAgra. They're the food producer. They did beat by about 13 cents a share. Also, revenue was above expectations, and they raised their dividend by 6.5 cents, and so they're trading up 2.7%. And the other one I have for you is I just went blank. Constellation Brands. I don't have the details. I know they beat, and they're trading up 1% this morning.
Cool. That's the beer distributor.
They are the liquor distributor.
Liquor, yeah.
And they own a significant part of Canopy, the marijuana distributor.
Well, that explains a lot.
Actually, that hurt their earnings. If you put that in there, that was about a 20% of a 20-cent loss in their earnings.
Oh my Lord, the weed futures are off. We're really in trouble now. Resetting the table for the morning. Green day yesterday on Wall Street. We've got some closed markets in the Asian Rim, so we don't have the influence coming over from across the Pacific this morning. How are we doing 45 minutes before our markets open up, Phillip?
We're looking really good again, Dave. We've got the S&P 500 up 0.8%. We got the Dow 30 up between 0.6 and 0.7, and we have the NASDAQ really catching on fire today. It's up 1.4% this morning as we get started. On the commodity side, silver's getting a big bounce this morning, up 1.6%. Gold is back over $1,900 an ounce at $1,910. It's up 0.75%. Not so good for oil, down 1.4% this morning to $39.65 a barrel.
Well, we've got to get it back up there somehow. Asian Rim markets, as I mentioned, there was a holiday in the Chinese Rim, so they were closed. Japan got shut down because of some sort of a computer glitch, so nothing out of Asia. British and German markets are kind of split this morning. Great Britain is going up by a little bit. German down by about the same amount. No real trend to be established out of Europe. As you said, Philip, just rumors about a vaccine or rumors about the bozos in Congress doing something can move the markets, and that means they can move your retirement account as well if you don't know where the risk is. That takes advice to find out where the risk is so you know what you're putting at risk. How do I find you to be able to find out where it is?
With all the volatility, it's a great opportunity right now to really find out how much risk you have, and it's important. The closer you get to retirement, the more you understand what that risk number is. Give us a call to find out how much risk you have in your portfolio for a great portfolio review, 863-382-0037. Follow us on Facebook. All you have to do is look at Statler Financial Services and like our page and follow us there. And then catch us this weekend for the Statler Financial Radio Show. I know this week it'll only be on at 6 a.m. on Saturday and 10 a.m. on Sunday morning on Highlands News Talk 730.
And we also stream it for you as well as newstalk730am.com. Phillip, thank you again so much, and we'll catch you on tomorrow, all right?
All right, man. You have a great day, and I will talk to you in the morning.
Gotcha. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Wait.
Hey, folks, I do want to welcome you to the fourth quarter of 2020. Hope you have a great day. I look forward to you joining me again tomorrow morning. Until then, best wishes.